Hello everyone and welcome back. In my first video, we laid the foundation of our supply and demand trading. In that video, we discussed about identifying market structure, marking valid zones, waiting for confirmation, and validation. Most importantly, we discussed about waiting for retest instead of chasing price. In that video, we also discussed about our 3 types of entry models. Today's video is a direct follow-up to my first video. In this video, we will be looking at a few more examples which will help us build trust and confidence in the process. So I would suggest you check out that video first and I will put the link in the description for you guys. So if you're looking to build a strategy or finding a model to improve your trading, this video is for you. So let's get into our charts. So I have seen 2 types of errors that supply and demand traders make. First, some traders, they randomly draw supply and demand zone and then they hope for market to retest their zone, and then what happens? They end up keep waiting for retest and nothing happens. And second, I have seen some traders, they mark zones before the price has proved anything. I do the opposite. I let the market to show intent first, then I wait for a retest for my execution. So here we are going to look into some real examples, break that down step by step. So this trade I have taken is from September 3rd. Now before we draw zones, mark levels, it is very important for us to understand what the price is doing. If the price is struggling, expanding, what we see here is that the price was ranging for some time and then we see this bullish intent. Now remember, intent is not a confirmation. If this bullish intent was real, we would like to see market pull back into our last sub demand zone using our last opposing candle, and we would like to see an impulse break away from the demand zone. Now let's see what actually happened. So now we see that the market did come back to our demand zone but did not make a new higher high. Market is still trading in the range. Now we see when the market was retesting our zone, it did not create a new low. Instead, it broke our structure. So this is break of structure. Now this break of structure is a clean displacement of bullish candles. These are not overlapping candles. We see clear break of structure. Now when that happens, we go and mark our demand zone using the last opposing candle. So this last opposing candle theory, I have covered it in my first video. Please check it out. It is very important. You understand how we mark our last opposing candle. Now last opposing candle is where the buyers defended their position and sellers failed to make a new low. So this is the mini consolidation area that buyers and sellers were trying to defend their position, where buyers were able to defend their position and sellers failed to make a new low. So now, as I said, when that happens, we go and mark our supply demand zone. In this case, now we are going to mark our demand zone. We are going to use the last opposing candle. So this is the last opposing candle that I see, and this is the place where sellers tried to make a new low but failed to bring the price down, and buyers were able to defend the price higher. So now I have marked the last opposing candle using a rectangle because it's easy for me, and then I extend it out to the right hand side to use it for my future area of interest. Now our rule is very important. When this happens, we are not going to chase the bullish displacement. It is very risky. So what we are going to do is we are going to patiently wait for market to retest our demand zone, and then we will look for an execution for a long entry. So remember, this is where FOMO happens in the first move and traders, they blow up their account. So always wait for a retest because that's where we make money. Sometimes the market will not come back to retest. If that happens, I'm not going to chase. That trade was not for me. So let's run this chart and then see if we got an opportunity. Now we are going to wait patiently for market to come back and retest our zone. Now key point, an important learning here. Some of us will think that the market is nearing our demand zone, so it's time to buy. some will see this hammer and then they will jump in. So these traders are called as early buyers, and market always like to shake out those early buyers before they show their real move. So let's see how it happened. Perfect. So those early buyers most probably would have stop loss right under this hammer. Market took them out, and we also see that the market is near our demand zone. So when the market touches our demand zone, we are not going to buy from here right away. We would like to see real buyers are stepping in. We also see that the price is slowing down, which tells me that the behavior is changing. Now, I'm not going to immediately buy from here. We want to see buyers are in control now. So we see here that buyers are stepping in. But this second candle and the third one, sellers are also active. Now let's see our next candle. Now this fourth candle is a pure strong bullish candle that shows all the selling absorption has been absorbed. Now it is a good time for us to make an entry. So I would enter at the closing of this candle and I would put my stop loss below this swing low. Now let's see how the market traded from here. Okay, so we see that it's now trading in our favor, making higher lows and new higher highs. Is in our favor. So let me pause here. So this is definitely a win trade for us. Now my invalidation and where I would stop looking for short entry is if the market is trading below our demand zone. Now about our risk reward. Alright, so our next trade is from October 23rd, and what we see here on the left is that market was in a range and then we see market opening gap up. This move, market is just digesting this gap up, nothing else. If this bullish intent was real, market would need to come back, respect this level, and then we need to see a new high. Let's play this out and see what happens. Alright, so what we see here is the price came back to our level that we were discussing, and I also see that the buyers are present here. At this moment, we are not going to do anything here. This is a watch zone for us. We would like to see if the buyers are able to defend this area and push the price higher, or if they fail. So let's replay and see what happens. Alright, so what we see, buyers failed to defend their zone. And we don't see just candle wicks, but we see an actual body closing below that zone. So this is our bearish validation. So this is our last opposing candle. This is where the buyers last tried and failed significantly. So I'm going to use that candle as our last opposing candle, and I'm going to extend my rectangle for our future area of interest. So we are going to wait patiently and let market come back to our retest, and then we will look into execution. Alright, so we see sellers are now present. But as I said before, and so many times, we are not going to sell from here right away because market has entered our zone. We want to see real sellers stepping in and sellers are in control. Alright, great. So now we see a strong bodied bearish candle. So what do you think? What I think is that the sellers have aggressively stepped in and they have full control of the price. So we are going to enter at the closing of this candle and our stop loss above this high. So let's play this chart and see what happens. Okay, so we see that the trade has moved in our favor. Great. So this trade is also a win trade for us. So you see how we got our bearish validation. We waited for retest using our last opposing candle and the market then moved in our favor.